Around the time of COVID, I became very focused on inflation, really thinking that inflation was the most pertinent risk confronting investors, all different kinds of investors, but certainly credit investors. Because what I perceived starting in early 2020 was that we would be on the precipice of a decade of substantial inflation. What I really saw was an imperative to begin to think about how do you engage in credit, but at the same time reposition the structure so as to defend against that risk of inflation.
Andrew Hohns, CEO of Newmarket and Battery Finance, is a leader in structured finance.
In partnership with 1031, Battery delivers cutting-edge, long-term financing solutions for individuals, corporations, and institutions investing in Bitcoin.
His work champions innovative investment strategies aligned with today's technological advancements.
Before we entered the scene, really the only way to borrow against Bitcoin was through, we've developed an approach as a lender that recognizes the long-term collateral value of Bitcoin without mark-to-market risk.
Why are you so sure that this acre is going to persist?
I think that the first thing that a lender ought to understand is
Hey guys, so I'm back with another episode. Yeah, really one that's on my mind for quite some time. I'm really excited to be talking to Andrew Hohns. There's a lot we have to cover today. It's such an interesting topic, and it's a pleasure to have you here on the podcast, Andrew.
Thank you, Pascal. I'm very glad to be here with you and all your listeners.
Great. Yeah. The reason I wanted to bring you on is really, we talked privately before. Again, you've given me somewhat of a presentation of what you guys do. It's so interesting. I was pretty intrigued. And then just recently, I saw this interview that you gave on CNBC, Squawk Box. And I think, you were able to talk about what you guys are doing at Newmarket Capital. So I want to dive deep there. But I think on the show itself, you clearly did not have enough time to kind of explain yourself. So that's why I thought I would love to bring you on and see how Bitcoin is fundamentally like changing the way the mechanics of asset-backed lending is working and stuff. So that would be nice to talk through with you today. But maybe first off, if you could introduce yourself and then also tell the listeners how it came about that you now are working on such products, that would be nice.
Sure. No, I'm happy to. Thank you, Pascal. That was an incredible experience on CNBC, on Squawk Box. It goes by so fast. Anybody who's ever heard about broadcast and what that setting is like, it's like it goes by in the blink of an eye. And of course, the hosts, Joe, Andrew, and Becky did a wonderful job of covering different facets of the story. And I was thrilled to be able to talk about not only the loan that we just completed, which we can go into in detail here on this show, but also some of the implications for pension investors and the Bitcoin strategic reserve and institutional adoption more generally. But it really struck a chord. Since that appearance, I have received a huge amount of outreach, inbound calls from people of all different types that are seeking to finance their goals in the real world, the traditional world, the tangible world, in part powered by their Bitcoin collateral. And that's a very exciting response that we've gotten from that Squawk Box interview. So it's pretty cool. We can go into more detail about that. But my background, Pascal, I've been in structured credit for 20 years, a little bit more. I've been working with every different kind of securitization and many different asset types, corporates, asset-backed loans, cash securitizations, synthetic securitizations, a whole range of structured finance and structured credit approaches. I am the Chief Executive Officer and founder of Newmarket Capital. We are a Philadelphia-based investment advisor serving predominantly institutional clients, pensions, insurance companies, other similarly situated clients. And we've been working for many years, investing with banks on their portfolios of loans to help them navigate regulatory capital considerations by transferring some of the risk on their legacy loan portfolios. And, starting about around the time of COVID, actually, I became very focused on inflation and really thinking that inflation was the most pertinent risk confronting investors, all different kinds of investors, but certainly credit investors, because what you have in fixed income is you have, at least under traditional structures, a maximum return is your initial principal, right? You make a $100 loan, you get some interest along the way, and then when the loan matures, if all goes well, you get $100 back, or 100 francs, or 100 euros, or whatever the case may be. And if in the interim period, the value of that unit of account erodes, then the total return is very substantially affected in a negative way. And what I perceived and really began to look out toward starting in early 2020 was that we would be really on the precipice of a decade of substantial inflation. And that's coming from many different factors. We can certainly talk about what some of those are, but excessive deficit financing, governments around the world, very large central bank balance sheets, currencies that are not tethered to underlying hard assets, the abandonment of gold, silver, certainly Bitcoin-backed currencies, for more than 50 years. And so what I really saw, Pascal, was an imperative to begin to think about how do you engage in credit, but at the same time reposition the structure so as to defend against that risk of inflation. Mm-hmm. And that's what led us down this, what has proven to be a very fruitful intellectual journey and a very, very interesting series of financial innovations blending Bitcoin and credit.
Yeah, it's very interesting. I think what you just explained, this monetary inflation, I mean, it's been dawning on so many people. I think Michael Saylor has done a great job at explaining all of this. And then a lot of people have done a great job, but I think it's really trickling down into everybody's mind, at least also when I talk to my friends, who are not even in finance, but then also with people in finance, at the bank that I'm working at as well. I mean, more and more people start to understand that it's really hard to kind of outpace and outperform this monetary inflation, like the hurdle rate that you also sort of have, as a company or an investor or whatever, like Michael Saylor calls it. But I mean, if that's kind of like the context that we set, then what is it exactly, on the show CNBC that you were at that did strike this chord with so many people? What did you explain? And sort of maybe we could take it from there, go into the product and the loan that you were actually talking about, and then also explaining it to people. So that would be interesting.
Well, we've developed an approach as a lender that recognizes the long-term collateral value of Bitcoin and does so without mark-to-market risk on the Bitcoin. I mean, before we entered the scene, really the only way to borrow against Bitcoin was through structures that are not suitable for long-term investments. I mean, the kinds of ways that you could borrow would be basically with continuous liquidation, mark-to-market facilities at high teens interest rates. And even if you have a lot of Bitcoin, I mean, imagine that you have, a significant amount of Bitcoin, $20 million worth of Bitcoin, and you want to do a $10 million development of some kind of long-term development, whether it be a multifamily apartment building or a commercial real estate development or some kind of project, maybe a energy project or something like that. And you borrow $10 million against the Bitcoin for 10 years, it's so volatile that there's going to be a lot of sleepless nights. And not only that, but also at the same time, the income that the project can generate is probably not going to be sufficient to cover the high teens interest rate on those kinds of facilities. And so it's a very stressful kind of a borrowing construct. And it's driven from the fact that the market is really still in its infancy, and it's very hard to identify providers of longer duration capital in respect of the Bitcoin space. What we've developed is a new approach that combines Bitcoin with traditionally financeable assets in ratios that are sensible from both perspectives, both the Bitcoin perspective and the traditionally financeable asset perspective. And so, if you have, let's say a good way to think about it, you have a $25 million multifamily apartment building. Maybe we'll combine that with $5 million of Bitcoin. So we have $30 million worth of total assets, and we could contemplate a financing facility 70%, 75% to that combined structure. Maybe you have a $21 or a $25 million financing facility that's supported by $30 million worth of assets, the Bitcoin and the building. And the building has a rent roll, and it has income that it generates. And that is where we are able to find credit support for the interest rate that we charge on the financing facility. And the interest rate is really designed to be in line with what a market lender market rate would be for a traditional real estate lender that does not integrate the Bitcoin. But at the same time, we also share in the appreciation of the Bitcoin over the life of the loan with the borrower. And generally, we structure our financing facilities such that the longer that the loan is outstanding, the greater the share of the upside the borrower is entitled to, and we gradually reduce our upside entitlement. We want to encourage long-termism in respect to Bitcoin. We want to encourage lower time preference. And if we're able to receive interest along the way on asset packages where we view that the loan to value is going to be decreasing as Bitcoin marches through its halving cycles and adoption metrics and evolution and product development of all the things that are being built on Bitcoin, we're happy to have that long-term view. And so we view that it's a very interesting position to be in from a lender's perspective, in the sense that the combined collateral value of the traditional asset, which is probably going up also by inflation over time, but not as rapidly as Bitcoin, and the Bitcoin, which is going up not only because of the inflation impulse, but also because of all of the use cases and the rapid adoption and the utter scarcity of Bitcoin, is driving our loan to value down over the life of the loan in a very positive way from a credit perspective. And at the same time, we're sharing in Bitcoin's appreciation with the borrower. So that's the essence of the structure that we've developed.
Yeah, exactly. No, so well explained. But maybe if I want to dissect this, and just to make sure I understand it and also the audience does understand it. So it's really a borrowing lending product in the end. We have a borrower and you have a lender. And then as I understand, you guys are the lender. You are the ones who are providing the funding. And then you have somebody, a borrower, exactly, who wants to buy an apartment, multi-family, as I think, as you said, and it could be any type of apartment, probably, right? And there, obviously, these kind of credit products, they're done by underwritten by banks in the traditional world. But now the difference is really that you probably have a small amount of the money that is being borrowed or that is being lent is also put into Bitcoin, right? So you have this as a sort of extra additional capital, as we said, and collateral as well. And that's really overall how the product functions. And then again, you have interest rates, just like in a normal product where people have to pay. And then obviously they also have to amortize the principal. So it's really like this, right? I do sum this up correctly.
Yeah, you certainly have, Pascal. I mean, it's not just for apartment buildings. This type of financing is quite flexible. We have been exploring providing these kinds of facilities for owners of multifamily apartment buildings, but equally owners of other commercial real estate, shopping centers, corporate office buildings, hotels, project financing, power plants, anything with a underwritable cash flow can lend itself to a structure that redenominates some of the equity out of fiat and into Bitcoin. Because if you just pause and you think about it for 1 second, and none of this is not a very intuitive topic, let's say. So it really is worth dissecting, to use your word. But anytime you take a loan, if you have a loan, you have a multifamily apartment building and you just borrow some Swiss francs against it, or you borrow some US dollars invest against it, and you think of that loan in US dollar terms, and you think of the value of the property in US dollar terms, you actually have two bets. You have the credit, which is producing some cash flow, and it has all of its attributes, and it has, the bricks and mortar of the building, and you have the fiat currency. So in every existing loan, there are already two legs of the trade. There's the currency and the asset. And, in the mindset that we've had, we haven't really had alternatives that would allow people to, to replace that in a way that works. You could imagine, what would this property be worth if it were denominated in gold, or what would the property be worth if it were denominated in silver? But if you look at some interesting websites like pricedinbitcoin21.com, and you look at the long-term performance of Bitcoin versus over 100 different assets, what you see is that Bitcoin is really monetizing very rapidly, and it's commanding such a monetary premium. And so if you have equity in an asset or in a portfolio of assets, and you're also interested in adding more Bitcoin into your life, one very interesting way to do it is to redenominate some of that equity out of fiat and into Bitcoin through a financing structure such as this. And that integrates Bitcoin's dynamism into the existing investment objectives of the borrower.
Mm-hmm. Yeah, because that's one of the things I didn't mention yet when I was summing it up in my own words, because as I understand, then, we have the Bitcoin and it's part of the collateral package, so to say. And then obviously, if we assume, as we just kind of did, because of the monetary backdrop and everything that's been happening, Bitcoin is really appreciating, then I think what you're doing is also you're giving some of that cut back to the borrower as well, right? And some of the appreciation is it goes into your pockets. But there, it's obviously, both of these parties can profit from the appreciation, and in parts of the borrower, or in case of the borrower, I mean, it's interesting that such an appreciation could even sort of help him amortize the loan that he has a lot better, right? In terms of, like, traditionally he would just have to pay this, and with Bitcoin, Bitcoin could pay for the amortization to some extent. And that's certainly one of the big benefits that I see from the viewpoint of a borrower. Are there, like, what other benefits are there, and thinking about why a borrower should opt into such a loan structure or such a loan product?
Well, that's a really big benefit, the one that you mentioned. I mean, it's an enormous benefit. And it's one that also is already felt when you have long-term financing, even without the Bitcoin. I mean, you might hear people who say, oh, well, I bought a house back in 1990 or 2000. I bought a house. It was $500,000. And now that house is worth $2 million. And my mortgage, I've been paying it off over time, and there's $100,000 remaining. And so because the house has appreciated over time, but the mortgage balance is still denominated in its original terms, the effect of inflation drives down the long-term real cost of borrowing in a very effective way. And, many people have experienced that already in their personal borrowing, as well as in their commercial borrowing. Where, of course, it doesn't work is assets that depreciate. If you're talking about like an automobile or something like that, you borrow the money to buy the car, but the car, it doesn't go up in value over time. It goes down in value. And so that doesn't have the same effect. But with real estate, it does. Now, with Bitcoin, because it's so finite, because it is finite, and because it's so scarce, and not just finite and scarce, but also fungible, divisible, weightless, transparent, protected by the largest computer network on Earth, the most widely adopted asset on Earth in all likelihood, and so useful in so many different ways, it is monetizing very rapidly. And so if you reframe some of your equity as a borrower into Bitcoin, then you essentially have a double benefit, because the loan balance is still expressed in dollar terms or fiat terms, but a portion of the asset package is monetizing at what I think is likely to be a very, very rapid rate, which is the Bitcoin side. The other side should also be appreciating, but maybe at a rate that's more in line with its historical appreciation, the real estate side. So yeah, it's a very, very powerful dynamic.
Yeah, I mean, the way you just described it is obviously like, to a Bitcoiner, it's really, it all makes sense, But the thing which kind of, when I heard it first explained by you and others, the potential that we're having here, it's like this product, it can even be made enticing to people who maybe don't understand Bitcoin, sort of, or there's like benefits without Bitcoin, or because you have Bitcoin integrated, you can offer other benefits in terms of, I would imagine, like more flexible terms for the credit, like shorter loan term, maybe, because that as a lender, maybe you understand Bitcoin, and that's why you can offer a shorter term, or maybe better credit conditions. You can go for a lower interest rate because the Bitcoin is going to make up for it and even outperform the interest rate. So, like, even from that perspective, is that correct? I feel like you can offer benefits to the borrower who might not even directly be connected to Bitcoin itself, and more coming from Bitcoin's appreciation that is understood by the lender.
Yes, absolutely, Pascal. I think that there are a lot of levers, let's say, that you can adjust. And what's one way to think about it is that interest and amortization is a very short lever. It sits on top of a fulcrum. And if you have a very short lever, it's quite hard to lift a heavy object. If your lever is only, so big, then, and you put a heavy object on the one side of it, it doesn't matter how hard you push it down, you're not going to be able to lift that object. But if you extend the length of your lever, then suddenly that object becomes much easier to lift, because you increase your leverage, right? You improve your efficiency in that regard. And I think of interest as a very short lever. It's hard to lift things really with interest only, especially when you consider the rate of debasement that is occurring in fiat currency. But if you use Bitcoin, you have a very, very long lever, and it gives you a lot of flexibility to think about the interest component in a way that you just have more degrees of freedom. And so, yes, I mean, if you're, now there might be some considerations that you want to model toward. You might want some minimum amount of income. You might want some, some type of shape of total return that you have to bear in mind. But conceptually speaking, depending on the amount of Bitcoin that exists in the structure and the amount of income that an asset generates, you have quite a lot of flexibility as to the shape of the interest, the shape of the amortization, and the shape of the risk participation on the Bitcoin appreciation over the life of the loan to accommodate a financing structure that can be very, very powerful to enable borrowers to achieve their objectives in terms of the acquisition of real-world assets.
Mm-hmm. Yeah, I see. Yeah, that's interesting. I mean, from the point of view of a lender, that's also the question that then I'm kind of having. Obviously, as I just said, the way I'm trying to process this is like, as a lender, I would probably try to offer more favorable terms vis-a-vis like these existing structures that are out there already, just to entice like borrowers to actually come to me and pick me as a lender who wants to have this Bitcoin component integrated as well. But then obviously, I could have somebody come to me and say, well, but then as a lender, obviously I have lower interest that I'm getting if I'm offering a lower interest, overall. And I have this Bitcoin thing on the balance sheet, where I don't know if it's really gonna help. So my question maybe goes in that direction. As part of the lenders, you probably need people who do understand this in the first place, right? What Bitcoin is about. And because then it's even, again, net positive, because you're getting a second asset within the collateral package, so you decentralize or diversify your collateral assets. You don't only have the house, but you have something else, which is from that perspective nice. But how much is it needed that like lenders do really understand what we're talking about here and do understand the benefits of Bitcoin?
Well, it's important. I mean, it's important. I think that the first thing that a lender ought to understand is actually what's been happening with the dollar and the euro and the sterling and the yen. That's the first and most pertinent point of the discussion. And it's one that I think is scarcely understood. Because we, tend to just live in this world and we think in terms of the units that we all grow accustomed to, and whatever unit you were raised with, you grow accustomed to that. Alex Gladstein helpfully refers to this idea, the golden billion, the people that are born into the dollar, the euro, the yen, the sterling, a handful of other currencies, Swiss francs certainly among them. And, for this group of people, we're living in a veritable supermarket of financial services. We have many, many different types of deposit products, whether it be bank accounts, checking accounts, savings accounts, certificates of deposit, many different kinds of investments that are available, equities, bonds, certainly also many more complex investments and many types of credit products that are available, everything from short-term credit in the form of a credit card to, home equity lines of credit to longer term facilities as well, such as car loans, equipment loans, business loans, or even in some jurisdictions, residential mortgages that last 30 years. And when you go beyond to think about the other 7 billion people in the world, actually, they're very accustomed to what it means to have the fiat value of, the purchasing power of their fiat currency erode. And erode rapidly, erode without warning, erode continuously. And it's not great. I mean, it's not great, right? There are places in the world like Malawi where the best way prior to Bitcoin, the best ways to save as a store of value, you had three primary choices, right? Paper money, which you kept under the mattress, sheet metal, and livestock. And those are not the three great choices, because the paper money, obviously, it is subject to inflation, theft, also just like destruction, right? Casualty loss of different kinds. The sheet metal is not very divisible. It's very heavy. It's very conspicuous. It is rusting and losing value. And the livestock, you have to feed and water it, and it's subject to disease. And that's not very good either. But if you live in Malawi and you are able to access the Bitcoin network, which you can do if you have a telephone, and you don't even necessarily need a telephone. There are other ways that you can access it. Then you can start to save in this really remarkable asset, which is finite, secure, divisible, weightless, all of the things that Bitcoin is. And so people that are utilizing, the Argentinian peso or the Vietnamese dong, or many other types of currency around the world, the naira in Nigeria, are already really tuned in to the risks of debasement in those currencies. In the golden billion, it's a little bit less perceptible on an immediate frame than it would be in the case of the Turkish lira, but it's still very present. And it has accelerated because already the US dollar since January of 2020 has lost about 19% of its real purchasing power over the course of the last 5 years. So if you made an investment in a credit product in 2020 and you got back 5% per year, and now you're due to get back 100 cents on the dollar, you're basically just staying flat, even a little bit worse when you apply a discount to the interest component of those cash flows as well. And therefore, the very first thing I would say before an investor ought to, learn about all of the details of Bitcoin, would be well advised to really learn about the details of fiat and to appreciate the manner in which this debasement has proceeded more or less unchecked since you can call the start date. A lot of people say WTF 1971. I think that's a good place to start. But you can pick any date that you want. 1981, the U.S. had $1 trillion of funded federal debt. Now we're at like 37 trillion, and I think that number's going way higher for obvious reasons. So that doesn't even include Social Security and Medicare. And that's just in the United States. That's not to consider the same rough situation that exists in so many places. So, yeah, that's the first thing. And then when you realize that you have a problem, which you have to, you have to put yourself at a critical distance. Walter Benjamin, he talks about that critical distance. You have to put yourself at a critical distance in order to look at the object and assess what it is. When you realize that you have that problem, then you can start to say, okay, what are some of my solutions? And that leads you to conversations about real estate, because it produces income and it's finite, but it's not really finite. If you look at an overhead map of Boston from 1650, it is way, way different than an overhead map of Boston from 2025 in terms of the build out of the physical land. And the same can be said for Amsterdam and Rotterdam and London and virtually every place in the world. And gold, gold is very nice. It has a very long history. It's very beautiful. But it's not finite. It's growing at 2% per year, which means that the supply doubles roughly every 35 years. And silver is very nice. It has a lot of industrial properties that are extremely important, and it powers a lot of electronics and as well as solar panels and many other industrial use cases, but it is also not finite. And so you start going through it all, and then you come to Bitcoin, which is finite. There's only 21 million, and already 94% have been issued. It's scarce. so many people that have held it for so long. It's in, very long-term hands, long-term holders. It's divisible. You can sell a fraction of it, an infinitesimal fraction, in order to obtain liquidity. It's liquid. It's trading 24/7. It's weightless. It's not conspicuous. It's all of these things that make it very interesting as an alternative way to store value. It's frankly the first time in the history of it's a step increase in human capacity in terms of the ability to etch your capital and your labor into an immutable ledger and pass it down through not just decades, but centuries. And so, it's a very interesting tool. And I think everybody would be well advised to study both the problem, which is the fiat, as well as a range of solutions.
Yeah, exactly. Well, I mean, that's exactly the point, that you just these characteristics of Bitcoin that you just described, that's, again, from a lender's point of view, makes it so interesting. As you said, it's 24/7. There's a liquid market. There's always a market price. So again, as a collateral, this makes it sort of, I heard people say it's super collateral, and that's why it's also quite interesting to be integrated in these types of products. And I think my second question, you almost answered now with the answer that you just gave, because I wanted to ask, I obviously have critics surrounding me, and they would come and say, well, such a strategy, it really just hinges on a favorable, positive Bitcoin outperformance, CAGR as it is called, and I think they would then ask, why are you so sure that this CAGR is going to persist, and why is that, and I think you just kind of gave the answer. You said, well, you have to study fiat, and once you understand fiat, the problem, then it's probably a no-brainer that Bitcoin is the solution, and it is bound to go up, or I mean, because that's a counter argument I hear often, and I think people bring up with a strategy like this. It really hinges, and it depends on the fact that Bitcoin is going up forever, so to say. Does it, or I mean, what would you say to a person who brings up that argument?
Well, I mean, all investing is a thesis. And everyone is making a judgment, Pascal, on what they think is the problem and what they think is a possible solution. And in a market, you have two sides of every single investment, and people have different reasons at different times for buying and selling, and it doesn't necessarily have to do with a negative view on the investment either. It might just mean a liquidity horizon. I mean, if someone has been holding Bitcoin for a long time and suddenly they have a need for liquidity, or maybe if they, unfortunately, if they die or something and their heirs are required to liquefy it in order to distribute it through to the beneficiaries, or whatever the case may be. There are different reasons that you're going to have selling pressures at different times. But in every investment, everyone is always thinking, okay, there are positives and there are negatives, and you have to assess them. And what attracts us to Bitcoin, what attracts me to Bitcoins, is certainly the historical track record, but it's not just the historical track record. It's the characteristics of the asset, some of which we've been discussing on this call. And, my assessment that those characteristics are good for this time. It's funny. So some people, when you talk to some people who maybe don't know as much about Bitcoin or haven't studied it as carefully, they sometimes say something like, oh, you really believe in Bitcoin, or I don't believe in Bitcoin, as if it's like an article of faith, and a kind of religion. But that's not how I look at it at all. I'm not attracted to Bitcoin as collateral because of some belief system. I'm attracted to Bitcoin as collateral because I'm starting with the perspective that the dollar, the euro, the yen, the sterling, the Canadian dollar, and many other currencies are being badly debased by out of control spending that shows no signs of stopping, and a very significant pressure in terms of the increase in the quantity of money, which is manifesting in a lot of inflation and serving to monetize the existing debt that many entities have taken on. That is my assessment of the problem, and therefore I'm seeking a solution. And the solution that I'm looking for is an asset that is poised to magnetize this energy and attract it to its core. And what I'm attracted to there about Bitcoin is the very things that we talked about, that it's finite, that it's scarce, that it's divisible, that it's fungible, that it's weightless, that it's transparent, auditable, consensus-based, decentralized, all of those factors. So, yeah, I think that's, I think that it's really, no one is going to do your thinking for you. Not in this world. The human mind, maybe AI is going to change this, but look, Ayn Rand and the Fountainhead in Howard Rourke's Final Defense, he lays it out there. You cannot breathe for another human because you cannot share lungs. You cannot digest another human's food, and you cannot think for another human. Every human must think for him or herself. And so that's the moment that's upon us. Yeah, exactly. We can only help in sort of like providing these sort of podcasts and calls and just talk about these topics for people to more easily wrap their head around these type of topics, but then, as you said, in the end, they kind of have to study it themselves and really understand. And that's all we can do. But maybe I have one last question regarding this product, that we were talking about, the loan product, because I think you have this excellent name like Battery Finance, that you're also using. And it's this also, again, beautiful image or picture of like what you're doing. You're using Bitcoin as a sort of like battery, so that's how I understand it. And you're charging your loan, with this entire value that comes along with Bitcoin's appreciation. So, you're just kind of enhancing this loan, obviously. But then one thing that I have, if I describe this to people, and I talk to them about it, they're saying, well, the majority of the repayment, is sort of trapped in the final payment of this entire structure, right? For the lender. So isn't that sort of a problem if after, let's say it's like a 30 years loan structure, and then obviously after these 30 years, this payment gets released, so to say, but then that's exactly the day where Bitcoin is again down 40 to 50% or something. So isn't there also an other way that we can kind of tap into this value already earlier? Or have you seen that criticism already yourself? Well, I mean, there are a range of different approaches that you could take, certainly, to address that. The question is time preference and the shape of the overall return. And through a combination of interest, amortization, and appreciation sharing, you produce quite an interesting total shape of cash flow, let's say. And if the Bitcoin appreciates along the lines of how it has historically performed, or if it does a little bit better or a little bit worse or whatever it does, there are many hedging tools that are available that one could utilize if that is the objective that is being solved for, in order to essentially further refine the shape of that cash flow. You can at any point with an asset like that, and MicroStrategy is doing a very interesting job with the convertible preferreds as well in terms of reshaping the volatility of the asset and offering different kinds of cash flow patterns, let's say, to investors. There are many different tools that could be utilized in that regard. So yeah, I think that's certainly something that is feasible.
Okay, I see. Yeah, because a friend of mine, he has also thought about this, Alex Elzer, and he's even written a paper on this, I think based on the product of yours, where he's kind of thinking, well, we could even kind of cap the Bitcoin to asset ratio, and whenever Bitcoin hits some sort of ratio, then you kind of sell some of the Bitcoin, obviously, and go back to this preset ratio. And then obviously you could pay it out to the lender. And that means you could already benefit from Bitcoin's price appreciation as we go. But as you also said, obviously that would mean it's all coming down to time preference, because that way, if you sell Bitcoin, you also forgo the future upside again. But as you said, it's so flexible. You can probably just structure whatever type of terms you would like to have with such a product, right?
Yeah, we're builders of structured finance. We're carpenters of structured finance, and Bitcoin is a tool. And the very nice thing about tools is that they are adaptable and they benefit greatly from human creativity. They benefit from different applications and ingenuity, and they benefit from, just keeping on to try. And you have the wheel begat the cart begat the bicycle begat the car begat the airplane, many, many different applications of reels. And you have the hammer, and some people build a house with a hammer. Other people build, other tools with the hammer. Some people build all kinds of businesses, buildings, everything that you can build. And just because one person uses a hammer or a screwdriver or a saw in a certain way, it doesn't prevent someone else from using it in another way. So I think that Alex's idea is a very interesting one. And the key thing is to, really begin to appreciate the wide range of applications of Bitcoin as a tool for structured finance, a tool to improve outcomes, and really infuse new energy. And yeah, battery, the name is coming from the idea that Bitcoin is monetary energy contained in a battery. Unlike a physical battery, the half-life of Bitcoin is, infinite effectively, right? It doesn't erode on its own. You put energy into a AA battery or a AAA battery, and you go back to it 5 years from now, and it has no energy. Bitcoin doesn't have that problem. Bitcoin maintains its monetary energy across time and space. That's extremely, extremely interesting. And as more and more individuals, families, companies, countries begin to adopt this source of monetary energy. And what is monetary energy? Really, it's human energy that is designed to facilitate a more convenient expression of exchange between people, between companies, between countries, so that you don't have to deal with the double coincidence of wants, which undermines bartering and its scalability. That's, the point of having a medium of exchange in the first place, and a store of value. So I think Bitcoin is going to open up a huge amount of possibilities. And of course, it lowers the time preference that we already know about. And many people who are in Bitcoin, they experience it, right? Say, before I was in Bitcoin, I wanted to eat this ice cream sundae. But now I don't really need that ice cream sundae. I would rather, how much does an ice cream sundae cost right now? It costs it's like maybe 10,000 sats. And so people are like, you know what? I would rather have the 10,000 sats. It's better than hot fudge. So
yeah, exactly. A lot of people have been experiencing this. Like once you're in Bitcoin, all of a sudden you start pricing everything in Bitcoin, and then your opportunity cost is always too high, and then you start like living really frugally. That's certainly also something I experienced myself. Yeah. Well, so well said. I mean, I want to wrap this up, but I want to have this one question that I want to throw at you, because I think you have some interesting thoughts here as well. And you mentioned MicroStrategy, you mentioned like different companies adopting Bitcoin, and there's this video now floating around on X, where Michael Saylor, I think he was in front of Microsoft, where he was pitching Bitcoin to the leaderboard there. And I think you even have some thoughts on where we as Bitcoiner and Bitcoin interested finance guys can learn from climate activists, and probably pushing Bitcoin adoption. So would you mind sharing your thoughts right there?
Well, I think that the last several decades, let's say, there's been a lot of shareholder activism across a range of different issues. And it started a lot with religious organizations and spread to prudential organizations, and then to many different corners of civil society. And a lot of people were trying to influence companies, saying we want you to have a more positive orientation toward human rights or toward climate or whatever the case may be. And that's produced many really important innovations and improvements to the way that corporations operate and behave, right? And their environmental stewardship and their manner of engaging local communities, and all of the different elements. There's been a big track record of that successfully. And I think that Bitcoin,
I think we can even point to examples, right? We can even point to concrete examples of where probably climate activists have been able to turn the ship, so to say, or implement a few things. I think we were speaking of some, right?
Yeah, for sure. I mean, there's a bunch of different examples in this regard, and there are examples of, companies that will agree to have the minimum benefits for different kinds of employees, or pricing considerations for different communities, or they agree to responsibly source the underlying materials in their supply chain. There are many different examples of this over the course of the last 30 years. And I think that Bitcoin is really interesting because it's such a multifaceted area, and everyone knows that Bitcoin is spreading in so many different arenas. It's in energy, it's in finance, it's in culture, it's in art, it's in fashion, it's in literature, it's in music, it's across all of these different areas. And so for a lot of people are saying, okay, we'd really like the companies that we are engaging with to embrace a Bitcoin standard. And that partially means putting Bitcoin on the balance sheet. I mean, that's the proposal that's in front of Microsoft right now, that they should evaluate Bitcoin as a treasury asset. That's important, right? That's a good way for any company to begin to evaluate use of corporate resources. Should we buy back stock? Should we make a dividend? Should we buy some Bitcoin? If we are going to hold a corporate treasury, should we hold it in dollars or euros or yen or maybe Bitcoin, and what percentage? But treasury is only the first step in a company thinking about how can they integrate Bitcoin into their activities, because many companies have investment portfolios. They have corporate pensions. They could think about, are they properly integrating Bitcoin? But beyond investment considerations, how about commercial and industrial applications? If you're a company that has a large amount of wasted energy. If you're flaring gas, and there's a lot of gas that's flared in this world, wouldn't it be better from a shareholder perspective to capture that flared gas and monetize it by turning it into electricity and hashing it into Bitcoin? And the same thing if you're a waste company and, you have landfills and they're just emitting methane. Methane apparently is very polluting from a point of view of emissions. Well, you can capture that methane and turn it into electricity, but the obstacle that many people are facing right now is that landfills are not located on the grid. And so even if you make electricity, there's nowhere to put it. There's nowhere to send it. There's no user that's located nearby. But Bitcoin is remarkable because you can co-locate the Bitcoin miners at the site of the energy. And there you're seeing companies like Vespine or Nodal do some extremely interesting things. Or you have novel business models like Gridless in Africa, co-locating run-of-river hydro, co-locating Bitcoin miners at run-of-river hydro facilities along with microgrids for communities. And that's not to mention, many other things. If you're a corporation, look, like let's say that you need heat for some reason as a corporation. You could either burn fuel to make heat, or you could burn fuel to make hash to make heat. And maybe that would be better. If you are even just a consumer product, Mike Germanos from Bitcoin Magazine, he gave a great presentation at MicroStrategy World earlier this year, which I highly recommend people to look up online, which was Bitcoin as a brand. And he said, look, Bitcoin is the most valuable brand in the world, which is remarkable because it has no board of directors, no marketing budget. It's, coming from this decentralized place. But if you think about it for a moment, if companies begin to embrace Bitcoin, Nike makes a special orange shoe, Vail Mountain Resorts introduces the Epic Pass Nakamoto edition, where for one Bitcoin, you could ski for the rest of your life. That would be, a very interesting marketing plan for them and a very interesting way for them to put Bitcoin on their balance sheet, and a very interesting way for them to embrace the Bitcoin community and begin to think about, okay, how else can we use Bitcoin and where else can it be relevant in our business? So when you allow yourself to think of Bitcoin as a tool, then that is where you can begin to see the many, many facets of its applications.
Yeah, it's so true. I mean, if it's a tool like the possibilities are endless. That's the great thing, And I find this so fascinating when you told me this the first time, that really that this is a way, that we can learn from all these people who have been influencing corporate managements around the world just in favor of what they believe. And Bitcoin has this possibility now as well, because we have a functioning community that is global. We have like people who understand it, who might even have the resources and the access to these types of people. And so it's so interesting. We have one person in Switzerland, actually, he's been buying, or he's been holding a share of the SNB, the Swiss National Bank, and every general assembly, he would go there and he would tell them, guys, you need to buy Bitcoin, put it on your balance sheet, and then he would also even calculate in front of them how much upside they have already lost, and that's exactly what I think we will see going forward, probably with more of these general assemblies of different companies, just people, Bitcoiners who have a passion and want the world to change to a Bitcoin standard. And that's why they will sort of evangelize even Bitcoin. So that's so interesting.
Yeah, the water's nice, right? Come on in. The water's nice.
Yeah, exactly. It is. It's warm and nice. And it's probably getting hotter. No, but thanks a lot, Andrew. That was great. Really appreciate all your thoughts and just thought through. So, where can people find you? How can people connect to you? And what are you looking for in the end, after all?
You can reach us at battery@newmarketcapital.com. And, we would be delighted to connect with anybody for whom this is resonating. If you're a borrower, you're an asset owner, you're someone who is looking to redenominate some equity out of fiat and into Bitcoin with, a portfolio of assets that you may have, or you have Bitcoin and you're saying, how can I put that to use on a long-term basis and use it to transform time preference and accomplish goals in the real world? That's certainly a discussion that we'd be happy to have. Would welcome anyone to reach out if you're looking to solve some of these challenges associated with inflation and how to reshape the outcome from a lending perspective.
Yeah, great. That's so interesting. Thanks a lot for this. Just the last question that I have, just quickly, like usually we do ask this to everyone on my show or on our show. Is there another high signal person that we should be talking to? Maybe even a person, that can talk about these kind of things from a different perspective, the things that we just talked through. Anyone that comes to mind, maybe?
Look, I think that you and your listeners would be really interested to talk to the team over at 1031, which is the largest, as far as I know, a Bitcoin-focused venture firm in the world. In full disclosure, they're one of the partners at Battery Finance and have been assisting us in the development of that. But their portfolio includes many leading Bitcoin companies, and they really have their finger on the pulse of all of the latest things that are happening in the Bitcoin community, whether it be Jonathan Kirkwood or Grant Gilliam or John Arnold. They put out their timestamp as well, which is their regular newsletter that offers not just updates on their portfolio companies, which are doing very interesting things, like Anchor Watch just became a cover holder for Lloyd's of London on their insurance products. And, other companies in the portfolio, whether it be Fold, offering a kind of mission control for people that are investing and saving in Bitcoin, and different ways to capture value in terms of that as a consumer, or Strike, or many of the companies that are in that portfolio, and also hardware companies, Cold Card, or CoinKite rather, and several others in the portfolio. Very interesting perspective on the Bitcoin ecosystem, but not just on the companies. If you look at their newsletters, also just on the philosophy. And, one of the things, and when I say philosophy, I mean kind of like business philosophy, because, one of the topics that is gaining interest is Sats flow. And what does it mean for a corporation to have Sats flow in contrast to cash flow? And when you start to think about how this might affect and really turn on its head concepts like price to earnings ratio or other kinds of considerations, if you're measuring your multiple in dollars, if Coca-Cola is earning whatever it is, if it's earning $10 a share and it's trading at a 30 times multiple and it's $300 for a share of stock, okay, that's interesting. But what if inflation takes that $10 a share to $100 in 10 years? Well, what does that mean for the multiple? But then if you start to measure that company in Sats flow, and where is it generating Sats and how is it producing Sats, that becomes a totally different question, and one that I think is going to be at the frontier of financial analysis over the coming years. So I would definitely recommend you guys getting involved with, not getting involved, but having them on the show and hearing their perspective.
Nice. Yeah. So interesting. Cool. Andrew, thanks a lot for your perspective, for all the ideas, and enjoy the rest of your day and talk to you soon again.
Thank you, Pascal. Have a great day.
You too. Bye. Thanks.
Bye-bye.